Hey traders, Parker here with another indicator. This is that supply and demand indicator. I had a couple of people request it. I wasn't gonna release it because it doesn't actually involve volume. It just involves price movement. It looks for a trend up and a trend down according to Heikenhashi, and it finds the last bearish candle or the last bullish candle within that trend. So if it's a downtrend, it'll look for the last bullish candle here, as you're seeing right here, as your resistance. If you look right here, you have a trend up, and it's looking for the last bearish candle, which is right here. That'll be a demand area. You can see right here the main clouds won't twist, but the preceding clouds will twist. If price is above those clouds, they would twist to blue, but if not, they would remain red, or they'll twist red if price falls below them. And that's what we're looking at right now. You're able to push. It gives you 30, so it gives you 15 supply, 15 demand clouds for the previous clouds anyway. So this is what it looks like when you have fully 15. I'm looking at it on a 5-minute time frame. It won't always be this clean or this clear. What you'll do is you just cut down on the amount of clouds. So that's one thing you'll be able to do. You'll be able to cut down from the amount of clouds that it's showing. And the main clouds are this green cloud, and that red cloud will always be your main cloud. They will always be that color. The preceding clouds, or the clouds after those clouds, will be that light red and that light blue color. You can change these colors if you don't like the colors that I've chosen. Just go down here and change them. See the bullish and bearish. So those are your clouds right there. Or changing the colors of those clouds. But for the most part, this is TLRY. It's an old date of what day was this? 11/6. This is when all the wheat stocks had their rally. I actually played this stock back then. Let's look at it. So this was the open right here. So 8:30. You had to drop down, which shows this area of supply. You can see the stock, it pushed through it pretty nicely, with no upper wicks up there. So it's just all pushing from there. But you can see this trail of long lower wicks down here. Long higher wicks down here. But you can see this cloud, even though it push this supply zone right here, this long low wick, and you can see there's another supply zone right there. This long one just going across. Price couldn't break it at first, but it finally did break it, and then it came back up. It fell into these two demand zones. Let me throw my volume indicator on there, and let's check out what colors, see how much volume or pressure pushed into those clouds. So it was on average volume that it pushed down, and you can see from there. Actually, this is not the one I should have put on. That's one that's going to be available in a moment. Which one? Volume. There we go. This one right here doesn't go off volume average. It looks at the highest candles. So we're looking at it like this on volume average or average volume. It was high volume pushing it down. Even though you got this white candle right here, it's according to volume buy sell pressure. What happened was this candle right here is a high wave candle, is indecision. And let me take a moment and change the screen. There we go. That way it's not as bright, but you can see how volume average played a role in pushing these candles to where they are. And you can see right here, this is just average volume pushing it down. So it wasn't a strong downtrend, even though it came from a strong downtrend. And you can see average volume pushing it back up, and then you got average volume here. But this is pretty much how the indicator works. We can go to different time frames, like a 30. Let's do a 30-day, 15-minute, and see what that looks like. And this is generally an uptrend, but you can see how all these zones played a role in this stock moving back up. You can see how these zones are on top of each other. showing that there's a lot of and it created this area consolidation right here. You can see those two zones right there. And then when it did try to push back above, it couldn't. Made another area of demand, then supply, then another area of demand, and it just proceeded up from there. And we'll go to a 30-day, 30-minute, and same situation. And we'll go to, what is this, 30-day, 30-minute. So we got 30-day hour. Same situation. You can look right here in these clouds how each one of these areas played a role in this cloud. I mean, in the stock moving up. So we'll actually go to the daily now. We can do the 4 hours as well, but it's going to show you the same. And one of the things about those main clouds, they always are going to be there. So if you want to look back, or if it runs out of those 15 minutes, just make you a line or draw you a line like this from this area right here to show there's a resistance area at that point, or the supply area at that point. You can do it for each one of these. I would suggest just doing them like this, looking for the highest ones or the next lowest one instead of trying to find each one, and just bring it down to the next one. And we'll just bring it down to the next one. And let's take it back down to the lower time frame. And you can see how those zones that I marked out played a role as well. You can see right here, price couldn't get above that, but it finally did break above. Got above this, couldn't get above this one. Tried to, had that blow off candle or high wave candle, and came back down. Tried to get back in this area, couldn't, but then it did right here. So let's go to the daily. And this is what it looks like on the daily. And you can see it's dealing with these areas right, this area right here. It didn't find this one right here. Well, it's not, like I said, it's not a perfect indicator. And it's a lot of volume right there. It's an irregular body. Yep, this one's an irregular body. But it does compare to this volume and that volume back here. But this volume is pretty high. So we can push it down to 0. And we're just going to be looking at those main clouds. And you can see this one right here, this area of demand persisted throughout this whole entire run right here. And you can see how price dipped down, can't try to come up, create another area of supply, push down back into that area, finally broke down through it, and it created this area of supply right here, and had to break back above it, and it created demand areas along the way. So this is TLRY. It was another one. This is what the S&P 500 looked like during that time period, and this is the COVID downfall right here. Let me go over more than, yeah, we'll do 3 years. So we're looking at 3 years, and we want to see how this really played out. You can see right here, created this demand zone right here. The way you really use this is more of a retracement. If price falls down into these areas, you can look for a bounce, a possible bounce that is. It's not a perfect indicator. I don't guarantee anything except for it's gonna look for those rallies according to Heikkinen, and is look for those bases. And you can look right here. This was a retracement. You can see price retraced back into this area, bounced, couldn't hold it, and actually gapped down. Tried to get back in it, and it couldn't, and got pushed down. And this one was created before. No, it had to be created afterwards. So it pushed back into this area, and you can see it had some trouble over here getting above it, and it came back to this area, retraced back to this area, had some trouble, was able to breach back above, but it came back down because it couldn't hold it. And that's why I'm saying you want to use this indicator as a retracement indicator. And let's put those other clouds on there. Let's do 5, and we'll see the most recent 5 supporting the previous supporting demand zones. You can see how the stock itself is having trouble right here. This is the second one, and this is the present one, and that's why these two lines right here. This is the present supply zone, and this is your previous supply zone. Likewise, you see this green, dark green line, it's your previous demand zone, and this is your present demand zone. And you can see how the stock, when it actually, let's see, so it had to fall through here, and it created this supply zone, and then it created this demand zone, pushed above, tried to break back above this old demand zone, couldn't, create another demand zone, pushed above it, got stuck in this old supply zone, finally pushed above it, and it came back down. And you can see it came back down on high volume, and it pushed right back up on high volume as well. But it's having a time right here. You can look right here. This is average volume, this light green candle. And this candle afterwards dark green because it's ultra low volume, or well below average volume. So we'll put the full 15 on there, and let's see what type of picture it paints. And you can see from there, it's pulling zones all the way back from here. So one of the things I noticed during this period when price was just falling, it fell to this area right here. You can see right here, this area. Let me push back out and just highlight the entire area. So we can see this area right here. It created this area of supply, bounced back into this area of demand, pushed back above, had a tough time doing it. Once it finally got above, it found another area of supply and tried to break down, but it stopped right there. Pushed down and back into this area of demand, tried to push back up, and it couldn't hold it, and it fell down. All this, you can see all this on ultra high volume. And I have it set for 12, but we could put it on 20. And I have it slated for Heikenhashi. I'll put it back on buy sell pressure. Well, you can see from here, it fell into this area of demand, this old area of demand, bounced up a little bit, and then fell back through. And that's generally how this indicator works. It looks for those areas retracing back to those possible supply and demand zones. And we'll go to look at the SPY today. I'm going to get rid of my drawings. And you can look right here. It looks pretty messy right now. And that's one of the reasons why I gave you the ability to shut off and present how many clouds that you actually want on there in case it is kind of messy like this. You can see how price pushed above those areas, but then it finally it couldn't hold those areas. It hit this last area of supply right here and came back down. Tried to break back above, came back down, and it hit each one of these demand zones, and it just couldn't hold it. One of the reasons why I made those twists and not just disappear like my O indicator is because, like Ann Coulin says, O resistance becomes new support when its price gets above it. And O support becomes new resistance when price breaches below it. So what we can do now is come over here and we can look at actually where today is. Today it fell into this old demand zone right here. You can see right here, it bounced in this area of demand right here. It was easily just fell through because there's nothing here. There's no clouds here. Same situation here. It's easily got above it. But once it got into this area, it didn't just go up. It paused and hit each one of these other supply and demand zones. Created this area of demand right here. You can see these two candles landed on it. But all this on is like light volume. This is on heavy selling volume right here. And then you have this ultra high volume down to the push down. And then you have high volume proceeding from there. You have this high volume right here. It's an irregular body according to the indicator as well. And it held that, it created this area of support right here, and then it created this other area of demand as well. And price retraced back to it. It couldn't break down below it. It had to gap down. And this is basically off all the bad news and everything. So what I'm going to do is I'm going to push away the clouds again. So we'll just go to 0. And we can look at it like this. And this is our most current ones. Like I told you before, this is your present. This is your most current demand zone. This is your most current supply zone. This is the previous supply zone. This is the previous demand zone. And you don't have to always do what I did, pushing up to 0. You can always just come back here to cloud 2 and says hide cloud 2. They all go away as well. And if you don't want to see those main clouds, just shut off the main clouds. Now you have just your lines, your most recent demand zone, your most recent supply zone, and the ones but before them. So we can go back and cut our main clouds back on like that. And this is what you have. And for me, it's kind of sort of like a roadmap. And you can see right here, it fell back into this area, and price actually pauses on these different areas. And you can see right here, create this area of demand right here. And you can see the bounce right there, create another area of demand before, after. And it went back into this area of supply, had a time to consolidate it a little bit, and then pushed above it, but couldn't hold it. And here's your little smiley face, where somebody pointed out on, I think Twitter, of the SPY. I wondered why it created that, but you can see right here, it's actually old demand zone that's become resistant. So we cut those clouds back on. You can actually see it right there. It bounced above in that area, but you have a lot of messy stuff right here. So you can say in one sense that it bounced above, it got above it, but couldn't hold it. Came back into this area right here, breached above it again, but it found support right here on this old demand zone. And then it finally breached it on high volume. So we'll go to 10-day 5-minute. It works better on the higher time periods, but you can use it on the lower time periods, but you probably don't want to use 15 clouds. So we'll drop it down to 5 clouds, and we can use those previous main clouds to create these areas of if we need be areas of resistance from those highs. So you can get this high, that high, and that high. And we'll push it up to 30-day 15-minute, and we can see what we're dealing with as well. This main candle right here, this blow off top, or this spinning candle right here, spinning top, you can see it create this area of supply. You can see all these huge wicks in this area, and then you finally got this ultra high volume right here to push it above it, but it's dealing with this area of supply now, and it's probably going to hit this area of supply as well if it SPY continues to rebound on this 15-minute chart. We'll put the other 15 on there, or the 10 actually, and you can see it got real messy up there. And we'll push it to 30-day hour. It's a little more cleaner. You can see how price pushed above these areas, or paused at each one of those areas. But over here, it just generally just went up. And this is, I think the FOMC, when they know, when they announced the inflation. They announced the inflation data. And you see SPY just basically just cut through all this stuff on ultra high volume, even on the hourly. And I think I have this set for 20, so we'll push it back down to the 12. and it should give you the same situation. You can see this area consolidation overlapping supply and demand zones, and what's happening in price. It's consolidation in this area because you can see all these overlapping supply and demand zones, and then it finally broke down below it. And because I'm looking at it on 30-day, we can go. Let's do the 180-day. And it finally paused right here. So, and that's generally how this indicator works. So that would have been it right here. This area. So about. Let me see what these drawings. Do I need these drawings? It's a gap right there. It's a daily gap. No, I don't need these drawings. Well, it's a daily gap down there as well. Same situation right here. But price is still pushing up after hours. You can see 385 was your close, 386.87, and the SPY's pushing up. Let's look at the futures, and it should be pushing up as well. And it seemed like it paused right here, or found this area of demand, at least for the time being. You can see how price is consolidating below this old area of resistance of supply. And let's go to the 4 hour and see what it looks like. And that's why I said it works generally better on higher time frames. And you can see right here, it's pulling from this area right here. It's actually overlapping supply and demand zones right here. Or you can say overlapping basis right here. And you can see how price hit each one of these zones and paused, 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 paused. Found consolidation between these two. Tried to push back above, got halted. Stopped right there. Completely collapsed. Found some area of support and pushed the back above, but got halted. Pushed right back down on ultra high volume. But you looking at ultra high volume, well, you would actually have to push out the average for these candles, or volume average anyway, to get a better view of these candles. We'll go back to the SPY, and it generally should be the same in this 4 hour chart right here. You can mark out those areas of consolidation right here and right here, and look for price to get back above those areas. But this is the end of the video. For those you requested, just check the link in the description and you can get the indicator. If you have any questions or anything, please leave them in the comment section, and I'll get back to you as soon as I possibly can. And I appreciate you guys. I appreciate all the comments and the input, especially your suggestions and everything. And if you have one of my indicators, or if you're looking at one of my indicators and you want to add something to it, or you want to take something away from it, just let me know, and I feel comfortable with customizing it, or personalizing one just for you. But again, I really appreciate you guys taking the time out to listen to what I had to say and watching the videos and your support. I wish you the best, and God bless.